In the financial world, the U.S. stock market is facing a hurdle this week, threatening to end a 9-week winning streak. This potential break in the streak is more than just a blip on the radar for investors. It's a significant development that could signal shifting tides in the market. For the past 2 months, the market has been on an upward trajectory, a bullish trend that investors have been riding with optimism. But as we know, the market is a complex beast, influenced by a myriad of factors both domestic and global. This week's hurdle is a stark reminder of the market's volatility, underscoring the need for investors to stay informed and vigilant. It's crucial to remember that the stock market is not a one-way street, and while streaks are exciting, they eventually come to an end. The direction of the stock market now heavily relies on the upcoming December jobs report. The December jobs report, a highly anticipated piece of data, is set to play a major role in determining the future of the stock market. You might wonder why. Well, the jobs report is a barometer of economic health that can sway investor sentiment and influence monetary policy decisions. This month, investors are particularly keen to see how the labor market has fared. A strong report could signal steady growth, reinforcing confidence in the economy's resilience. On the other hand, a weak report could stoke fears of a slowdown, potentially prompting the Federal Reserve to consider rate cuts. These cuts, in turn, could stimulate economic activity by making borrowing cheaper. So you see, the jobs report isn't just about jobs, it's about the interplay of various market forces and policy decisions, all of which can impact your investments. While we wait for the jobs report, other global events are also impacting the market. In international waters, Danish shipping giant Maersk is diverting vessels from the Red Sea due to threats from Houthi militants. This strategic move is more than just a temporary detour. It's a complex challenge that could potentially ripple across the global economy. Here's why. The Red Sea is a vital maritime route, connecting the Mediterranean to the Indian Ocean, and any disruption in this route can have significant consequences. For Maersk, the world's largest shipping line, this diversion means longer transit times, increased fuel consumption, and higher operating costs. But the implications don't stop there. These additional costs can trickle down to consumers as companies may pass on these increased expenses in the form of higher prices. This could potentially fuel inflation at a time when economies worldwide are grappling with rising costs. Moreover, the situation could lead to supply chain disruptions. Given that Maersk transports a significant portion of the world's goods, any delay in shipments can result in shortages of essential items, from electronics to food. This, in turn, can exacerbate inflation and disrupt economic recovery efforts. These disruptions are causing waves in the market, but there's also news from the world of sports that's capturing investors' attention. In the realm of sports, the NCAA and ESPN have reached a landmark media rights deal, worth $920 million for college sports championships. This 8-year agreement is a game-changer, transforming how college sports events will be viewed across the nation. This isn't just a massive financial transaction, it's a statement of intent, a commitment to elevate college sports in a big way. But what makes this deal particularly noteworthy is its potential to reshape women's sports. Historically, women's sports have been sidelined, receiving less airtime and fewer resources. This deal promises to tackle these disparities head-on, providing women's sports with the visibility they deserve. In this era of progressive change, the NCAA and ESPN are stepping up, addressing concerns about unequal treatment in the world of college sports. This deal is set to level the playing field, making sports more inclusive and more exciting than ever. As we witness changes in the sports media landscape, a popular fitness company is making moves on social media. Peloton, a household name in the fitness industry, has announced a strategic partnership with TikTok to create a hub for fitness content. This move signals a shift in Peloton's strategy as they look to leverage TikTok's massive user base to boost their subscriber numbers and reverse a trend of falling sales. The partnership aims to create a unique space on TikTok, dedicated to fitness enthusiasts and Peloton users alike. This will allow Peloton to engage with a younger, tech-savvy demographic, potentially driving up subscriptions and creating a more diverse customer base. It's a bold move for Peloton, a company that has been a pioneer in the at-home fitness trend, and it will be interesting to see how this partnership unfolds and impacts their business. As we can see, from the stock market to international shipping, sports media, and fitness, the world is buzzing with news that investors need to keep an eye on.